Hello, and welcome to myfinancesteacher.org. In this video, I'm going to look at a range of assets as usual, and we're going to start with gold. As you know, over the last couple of days, gold has performed really well. It basically jumped from just above $1,800 to the current level of $1,851. But the intraday high today was at about 1,865. So in the last few hours, gold actually came down a little bit. To be honest, I was expecting gold to reach somewhere close to 1,830 over the next several days. But gold has moved quicker than I thought, and I think gold is getting a little bit too hot at the moment. We see again another repeated poke through the upper range of the Bollinger Bands, and we see a repeated entry into oversold on the 14-day RSI. And we also see that the ongoing short-term daily cycle has already been going on for, that's 47 days. Usually these last for about 1.5 to 2 months. Sometimes these cycles can be stretched, but it's getting pretty late into the cycle and the price itself is getting into overbought. So I wouldn't be surprised if over the next 2 to 3 weeks gold comes down significantly, possibly to at least come down to the 50-day moving average that's somewhere at about $1,750, or even come down to a round number of $1,700. So because gold is getting somewhat overheated, I keep updating my stop losses on a range of positions, including precious metals. You see the post from yesterday on the screen, and over here on the left-hand side in the menu you see a link to the portfolio where you can find more details on the range of assets as well as my stop losses. So gold has performed well and is probably overheating at the moment, but silver has actually done exceptionally well. In the last 2 to 3 days, silver broke above $20 and has nearly reached $23. That's over 10% gain in just a couple of days. But just like with gold, we see silver is coming down today over the last few hours. The high today is at 22.8, whereas the current price is only at $21.7. We see that the 14-day RSI is deep into overbought territory above 84. So I think it's nearly time for the precious metals cycle, the intermediate cycle in precious metals, to top and give us a significant decline over the next possibly a couple of months. So to be honest, once the markets open in the US, I wouldn't be surprised if a lot of my stop losses mentioned over here are triggered, and it will probably automatically reduce my position very much. And to be honest, I'll be perfectly fine with that. Even though the fictitious portfolio itself will not show much profits. The reason for that is because this fictitious portfolio was only launched in early July when precious metals were already pretty strong. In reality though, we've actually made really nice gains in precious metals all since March this year. So just as I was saying, I wouldn't be surprised if the stop losses are going to be triggered once the markets in the US open. And I would be perfectly fine with that because if you look at the optimism index on silver, it's actually getting into a red line. And if you look at this chart, all the way since the beginning of this bull market in precious metals, mostly gold, has actually started in December of 2015. Every time optimism index on silver got close to this red line, basically every time when everybody is just excited about silver, that's the time you probably want to get out. So if you don't have tight stop losses on your positions, you'd better think hard if you want to hold for too long from now on, as the markets, as the precious metals markets, are getting a little overheated at the moment. Next, we're going to look at Bitcoin. Bitcoin is basically flat, and as the time moves on from the end of the previous 2-month cycle in Bitcoin on the 10th of May, I'm more inclined to count another 2-month cycle in Bitcoin between the 10th of May and 27th of June. As if I don't count this as a 2-month cycle in Bitcoin, then the ongoing cycle would be going on for 73 days already, and it's getting a little bit stretched. So if Bitcoin is in a new 2-month cycle since late June, then I would expect an upward momentum for another few weeks. And what we see in July so far is higher lows on Bitcoin, which is a positive sign. And we also see that Bitcoin has broken its downtrend line it's had all the way since the beginning of June. This is also a positive sign. Another positive sign on Bitcoin is that it's broke this parabolic SAR on the upside. These are the dots that you can see. And although yesterday Bitcoin did poke above the 50-day moving average, today we see Bitcoin below that 50-day moving average again. At the moment, as you see from the cryptocurrencies part of the fictitious portfolio, I don't have any positions on Bitcoin, although we do have a position on Ethereum. And if I see strength in Bitcoin, if I see that it's comfortably staying above 50-day moving average over the next couple of days, I might actually take a position in Bitcoin as well. Next, looking at Bitcoin Optimism Index, as Bitcoin has been flat for quite a few weeks already, Optimism Index has been relatively neutral as well. But recently, in late June, Optimism Index was just somewhere around 30. So that might actually count as a 2-month cycle low, both in terms of low optimism in relation to Bitcoin and in terms of the low in the price chart. Next, let's have a look at Ethereum. It's doing pretty well so far. The Ethereum cycle is on day 25 right now, and these cycles are a little bit shorter than those for Bitcoin. They usually last for 51 days on average. So I expect another maybe 1 or 2 weeks upward momentum in Ethereum before we might see some decline. And looking at the 4-hour chart, as we mentioned in one of my previous posts, there was a chance for inverted head and shoulders. Looks like it's nearly complete, although the recent high on Ethereum hasn't really reached the neckline. The neckline is somewhere about $250. I think over the next couple of days there is a good chance that Ethereum does reach that neckline at 250. If you zoom in a little more on the 4-hour chart, you'll see something of a bull flag forming with green candles giving us our pole and the last several candles on the 4-hour chart giving us the flag. If it breaks on the upside, then at least 250 on Ethereum over the next couple of days will be very likely. But if it breaks on the downside below 241.42, that wouldn't actually look nice. Our stop loss is at 238.4 above the entry price, so we are sitting pretty comfortably on Ethereum. Next, moving on to the general stock market, S&P 500 is on day 22 in its short-term daily cycle. These usually last for about a couple of months, so I think there is still momentum for S&P to trend upwards for maybe 1 or 2 weeks. We haven't seen a repeated poke through the upper range of the Bollinger Bands yet, and I think we might actually see that over the next few days. 14-day RSI is only at 64 at the moment, so there is still room to get closer to overbought levels. And interestingly enough, S&P is trying to close this gap all the way since late February. The gap will be closed somewhere at about 33.30. With the FOMC coming up at the end of this month, I think if markets expect the Fed to talk dovish with the economies slowing down as health concerns become very important again, this Fed dovishness might actually help S&P to reach that 1330 over the next few days, probably by the end of July. And if S&P trends upwards for another 1 week or so, that might actually help our position in energy. So let's have a look at crude oil. It's basically still going sideways. Bollinger Bands are really narrow. I still maintain my opinion that we'll probably see significantly lower crude oil price sometime into the end of summer. Usually in the US, the demand for crude oil is higher in winter and summer, while the demand in spring and autumn is a little bit lower. So that might actually contribute to weaker oil prices sometime by the end of summer. And as I've mentioned before, the jump in crude oil price since the end of April is quite substantial, as you see. Whereas consumption, this is a recent report from Energy Information Administration, I think it just came out a couple of days ago. As you see on this chart, let me zoom in a little bit, consumption has only increased very little bit, while the price since late April has gained significantly. So it's very likely that future increases in consumption have already been priced in, and we should see some correction coming up soon. Next, looking at COT positions on crude oil. Black line here is the price of crude oil, whereas the yellow line is the net long positions. That's longs minus shorts. As you see, there is some sort of a positive correlation between these yellow and black lines. Whenever the investors are too excited, when their net long positions are very, very high, you probably don't want to enter into the markets. Whereas when investors are scared, when their net long positions are at records low, that's when you actually want to buy. And as you see at the moment, net positions are pretty high. So again, that might actually indicate a correction, possibly over the next several weeks or a couple of months, especially if health concerns don't ease out a little bit. These are the daily new cases in the US. We see that they're still pretty high. And these are total fatalities in the US. I hope we will soon see this chart flat, but as you see at the moment, unfortunately, the positive slope is still relatively considerable. And lastly, let's have a look at our position in XLE. The reason we entered into this position is because XLE actually lost a little bit too much compared to how crude oil price performed and how S&P performed since early June. It's clear that XLE was underperforming and it was probably undervalued. It's doing well so far, but I don't want to hold this position for too long. If crude oil is to correct over the next few weeks, that might hurt XLE. And if S&P is to rise only for the next 1 or 2 weeks, that's possibly when I will actually sell XLE as well. And in another 1 or 2 weeks, SLE might actually give us a couple of pokes through the upper range of the Bollinger Bands, signaling to us that, hey, it's time to sell. So that's my review for today. Let me know what you think in the comments. I wish you a productive day and good luck in your trades.